Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is the 7th of January. Let's dive into the week's stock market news. European markets waver amid thin trading and inflation concerns. European stock markets experienced a mixed start to the year, with the Pan-European Stocks Europe 600 index eking out a modest 0.20% gain amidst light trading volumes and a dearth of significant news. However, major national indexes painted a different picture, closing predominantly in the red. Germany's DAX index slipped 0.39%. France's CAC 40 fell by 0.99%, and Italy's FTSE MIB saw a minor decline. In contrast, the UK's FTSE 100 index bucked the trend, advancing 0.91%. The FTSE 100's outperformance was partly attributed to a weaker British pound against the US dollar, a factor that generally benefits the index's many multinational companies with substantial overseas revenues. The week's macroeconomic calendar was relatively light, but Spain provided an early focal point with the release of its preliminary consumer price inflation data for December. The figures surprised on the upside, with non-seasonally adjusted annual inflation accelerating to 2.8% from 2.4% in November, driven largely by rising fuel prices. Of particular note, core inflation, which strips out volatile energy and food prices, also quickened to 2.6%, exceeding the anticipated 2.4%. This stronger-than-expected inflation print from Spain appeared to bolster the arguments of hawkish voices within the European Central Bank, ECB, who are advocating for a cautious and gradual approach to reducing borrowing costs. ECB Governing Council member Robert Holzmann, in an interview with the Austrian newspaper Curia, suggested that policymakers might need more time before implementing further interest rate cuts. He cited rising energy prices and the potential for euro devaluation should the US introduce trade tariffs as factors supporting this cautious stance. Despite these hawkish undertones, ECB President Christine Lagarde, in a video statement, reaffirmed that inflation was projected to reach the central bank's 2% target in 2025, implying that the overall trajectory for interest rates remains downward. In the UK, the housing market continued to show signs of resilience. Data from the Nationwide Building Society revealed a robust increase in house prices for December, with the index climbing 0.7% from November, surpassing forecasts of a 0.1% rise. On a year-over-year basis, the house price index registered a 4.7% increase, the strongest gain since 2022. Separate data from the Bank of England indicated that net mortgage approvals for house purchases dipped slightly to 65,700 in November, falling short of the expected 68,500, but remaining comfortably above the 12-month average of 60,400, suggesting continued underlying demand in the sector. Now our insight into alternative markets. Private equity. Positive signals for fundraising and investments in 2025. The year 2025 is shaping up to be one of moderate optimism for private equity funds, According to expert analyses, a loosening of monetary policy in Europe, improved financing conditions, and a resurgence of exits, including through IPOs, are allowing European private equity and venture capital firms to look to the next 12 months with cautious confidence, bolstered by results achieved during 2024. Liquidity will be a key element, considering the weak post-exit growth of listed companies and the emergence of increasingly central secondary strategies. Despite this, fundraising in the European private equity industry has been robust, driven by mega funds such as EQTX, €22 billion, states PitchBook's 2025 EMEA Private Capital Outlook report. The report emphasizes, overall, 2025 is shaping up to be a crucial year for private capital in the EMEA region, with a mix of geopolitical challenges and opportunities arising from emerging sectors like AI and innovative financing structures. European middle-market private equity funds, targeting €100 million, €5 billion, are navigating a challenging landscape. Fundraising is down due to competition from larger funds, and high interest rates make deals expensive and exits difficult. This has been exacerbated by a stagnant exit market, limiting returns to investors. However, there's optimism for 2025. A booming secondary market offers an alternative exit route, and potential interest rate cuts could ease financing and boost deal activity. Long-term growth prospects remain strong, driven by increasing investor participation in private equity. Regionally, Italy's private equity market is booming, driven by a strong retail sector. The UK, France, and Germany remain dominant, accounting for over half of all European private equity investments. The outlook for 2025 is cautiously optimistic. Challenges persist, but easing monetary policy, a strong secondary market, and long-term growth suggest a potential rebound for European middle-market private equity.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, hubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.